Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, good morning, Jim, and it's always fun to get together on our Fridays.
We have two questions from our friend Mike today. First of all, Mike says, thanks, Jim. Last week's This Week in Money provided a powerful macro view of what's going on. And Bob, you were one of the featured guests, so I guess he's pretty happy with the job you did. I have two questions for Bob today. Bob, many of us have been waiting for that second big wave down in the markets that's just not happening. The Elliot Wave people say that the S&P has another big wave up to 4,000 or even 6,000 points in 2021. However, historical technical patterns suggest that maybe we're near the top and that we have a couple of waves down from here with the market possibly bottoming in 2022 with average PEs below 10. Bob, is it down from here or is the Elliot Wave euphoria justified?
Mike, from time to time I've looked at Elliot Wade stuff, and from time to time it seems to work, but the problem with specializing in Elliot is that it's open to interpretive stuff. I get stuff every day from a technical friend of mine who is an Elliot Wave guy, and he always does two alternatives, or most of the time. So Elliot Wave works for Elliot Wave people, but it doesn't work for me. And so what we use is the extensive financial history that I put together a long time ago, and then my colleague Ross Clark on the technical side has put together a couple of tools that work really well. And yes, we have been, well, in the summer months, and we took the rally to early September as being a natural one. And of course, through the summer, some of the rallies were excessive, so you were going registering technical excesses, and also valuations have been extremely high for quite a few years, so there's a lot of risk there. But the time that liquidity problems can be discovered, if they're going to be discovered, is usually in the fall, which we were watching for. But in October, the yield curve wasn't scary, and the credit spreads were sort of positive. And then what has happened, and as I wrote yesterday, everybody found something to be bullish about it. You couldn't find a bear. Even the bearish stories were considered as good news. So the markets did not go down. There was no drama on the downside, and industrial commodities stayed okay. You had a huge rally in lumber in the summer. It went from, 240 in March to 820, and then down to 440, and now it's sort of around high 500s. But no, the time for a discovery of a liquidity problem didn't show a liquidity problem. So we go on, but what we're doing here now is recognizing the excesses in the market, and we have two tools to register that. Momentum-based is we look for as upside exhaustions, or going the other way at bottoms, downside capitulations. Then also we have another tool which I call, it gives us it's pattern based, and it gives sequential sells at tops and sequential buys at bottoms. And what has happened with this, we're getting sort of and also that this sequential thing can give a signal on a quiet rolling top, and it seems to have given a sell signal this week. So the markets could correct for a while, but who knows who really will be the president come the new year. You've got on one side blatant attempts to steal the election, which is an abomination, and my guess is that the U.S. Constitution will prevail. The U.S. Electoral College will determine the new president based upon their determination, not the determination of the New York Times. So you've got unprecedented political volatility here, the whole world watching it, and so kind of making a call on the markets for all of next year is a bit dodgy. So let's just let this work out and see what we get to in January. And then there's another half of the question, Jim.
Mike also wonders if it's better to take a trader's approach to the gold miners as opposed to a long-term hold, at least until we have a definitive bottom in the equity markets. I understand we're approaching a seasonal low for the gold miners in a few weeks, and that it's time to re-add positions. However, I could see a situation where one should lighten up again sometime in 2021, assuming continued downside in the equity markets. Bob, over the intermediate term, possibly into late 2021 or early 2022, should we take more of a trader's approach to the gold miners?
Yeah, another good part of the question. Gold is a fascinating subject, and we found the best way to analyze it was you take the real price of gold in senior currency terms and deflate it by the CPI, gives you the real price of gold, and found ages ago that if the real price is going up, it improves the profitability of gold mining. When the real price is going down, it's the opposite. So the other thing is that when you're in a great financial bubble, where we have been for a few years, the history is that the real price of gold goes down, and you have the gold sector, the gold stocks, not just underperforming the S&P, but perhaps even in declines, which was the case. And as it turns out, the gold's real price bottomed in 2018 with momentum considerations and all that sort of stuff. So, and it was in November 2018 when, the action was starting to turn up. And our point then was that that would end the cyclical bear market for golds that started in 2011, and that it would be followed by a cyclical bull market for gold stocks based upon the improvement in gold's real price. And this has really worked out. You've had a strong uptrend in the real price, particularly if you take a look at gold relative to crude oil. And also, you got to understand that energy costs are a huge component of mining. And when the crude's down, the energy costs are down. So the other part of this is very important, and that was that the gold stocks were likely to outperform the S&P, not just rise with the S&P, but outperform. And I looked at it yesterday, and indeed, the outperformance over the S&P, it's done twice as good as the rally in the S&P. So that part is working. But in July, the momentum in the sector got way overdone, lots of enthusiasm, and our advice was to take some money off the table. And, of course, we're prepared to go back in at some time, and this is where our nearer-term technical tools will be so good at getting us back in. So But for investors rather than traders, the idea is that you, in the gold sector, once that cyclical bottom was in, you'd buy the dips. And then the opposite was for the stock market, that investors in the stock market would sell the rallies and stand aside, favoring cash. So, often you mention seasonality, which reminds me of the old one in the Vancouver Stock Exchange decades ago. In the winter, you couldn't do any exploration work in BC or further north because of snow. So there would be little news, and then also between Christmas and New Year's, the promoters would be on holidays and stuff like that. So in late November, early December, you would make your list of, say, 4 or 5 of the exploration stocks that you think would do well, and then you would start to accumulate them, and the idea was that you would finish your position building sort of by New Year's when the promoters were away on holiday. So, hey, it's kind of fun, but I think it's practical, and perhaps this year it could provide some good timing. Now, in a strong bull market for gold, the big ones will go up, the medium ones will go up, and also you'll have at some time a highly speculative market for the junior exploration gold stocks. So I kind of like that sector.
We'll have more with Bob Hoye when we return.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. Bob, shopping malls in the U.S. are filing for bankruptcy or just shutting their doors, hoping maybe they can open again. What's the background there?
Oh, overcapacity. And then you had the change to a lot of retail trade being done internet. Amazon's the example. But I don't feel badly for this because, gosh, you go back to late 1800s when Sears Roebuck got it started and catalog sales, and it sort of did it to many stores in small towns or corner stores and so that. So it was a dramatic change in retail distribution. And then later on, you then had the shopping malls that took business from Main Street in many places, and then now you have internet, which is taking business from shopping malls. It's the way free markets work. The losers get to lose, and the winners get to win. Whereas in a fully centrally planned country, the losers get to go on forever, becoming very expensive. So that's the way the world works. Nothing you can do about it much, except try and be in the right industry at the right time.
Right. Of course, a little over 100 years ago, people were decrying the loss of livery stables and riding academies and so on because people were moving into automobiles.
Oh, yeah.
So, yes.
Yeah, here's a story about Studebaker. I remember that. I got a picture in my file somewhere about 1870s, and it's a freight train with endless number of flat cars. And on those flat cars, each flat car had about 2 wagons, which were shipments mass-produced by Studebaker. Wagons. And then later on, Studebaker got into making cars, but they were slow to get into making cars, but at least they got in and were successful for a number of decades. But that's the other example. Studebaker became highly mechanized in building wagons. And so this is the case. If you leave entrepreneurs alone in a free market, the most wonderful products will come up, and there will always be new ones.
An American entrepreneur, millionaire in, I think, 1899 said, we might as well close the patent office. Everything we need has been invented. We have the steam engine. We have the telephone. What more do you need?
Yeah. Oh, yeah. In the, I don't know, maybe the 1950s, where the head guy at IBM said there was no need for any more computers. They had them. That was it. So you've always get statements like that, where people in important places get so used to what's going on that they don't see around the corner. So, and I again go back to Studebaker. They didn't really advance the production of automobiles. That was the key to automobiles, was Henry Ford's putting together the assembly line. And, but actually, probably Studebaker, and being able to make so many wagons, they had an assembly line. But they didn't see cars until much later. So, but it always changes, and it's a delight to watch it change if you're always on the right side. But if you're on the wrong side, it can be hellish, like these people with shopping malls. So,
Bob, a headline that caught your eye: central bankers seek new role in Brave New World. What's the story behind that?
Oh, that's a scary one, because it was Huxley who published a novel about a dystopian future called Brave New World. And central bankers are noted for their audacity and, at the same time, incredible ignorance, because their theories are not based upon evidence. It's sort of a notion. They got this back at the start of the Fed, which actually opened their doors in January 1914. The powers that be then understood that if you had a financial crisis, it would be followed by a recession. So then they came up with the idea of the Federal Reserve as the lender of last resort. So if a bank was in trouble or some other financial agency, the Fed was there, the crisis would be ended, and therefore there'd be no recessions. And even today, Jim, it's a very appealing idea, that a little financial wizardry, and you won't have any recessions. But ironically, this is now the 19th recession since the Fed started in 1914. So the theory doesn't work. So what? And somewhere there must be central bankers within the system who are practical enough to say, hey, really, does this stuff work? And it doesn't. But then they don't want to give up power, and they really think they're heroes, so they got this idea, if you throw lots of money at a crisis, it'll go away. And we didn't have a crisis this fall, which was the time, if there was going to be a liquidity problem, it would be discovered. You had a liquidity problem discovered a couple of times in Turkey, where they're running out of reserves, and that often precedes other lesser countries having a problem, so we're watching that closely. But anyways, on the central bankers, it's been one of the greatest promotions in history, based upon notions, not evidence. And at some time, the public, as they begin to reform the excesses we now see in government, will also reform the Federal Reserve, which has been corrupted, to providing endless funding or unlimited funding for another experiment in unlimited government. But I do see the reform, the political reform going on, and eventually becoming very successful, and part of that would be reforming central bank, and the way you do that is you put them on the gold standard so that the guys can't go around anymore thinking they're wizards. It's going to be, hey, Jim, it's going to be a brave new world.
Bob, how many recessions have there been since the Fed was invented?
Oh, well, all right, I just said it.
Yes.
1914 they started, and the National Bureau of Economic Research, called the NBER, is a semi-official collection of economists that sit down and determine when the recession starts and when the recession ends. And they declared that the latest recession started in February, and that is number 19 since the Fed opened its doors. So,
for those of you keeping score at home.
Yeah. The great American physicist Richard Feynman, in his Feynman lectures, which are amusing to watch, and he pointed out that no matter how well reasoned your theory is, and I'm just sort of paraphrasing here, or now how brilliant you are, if the theory is not confirmed by evidence or experiment, it's wrong. And the theory of preventing recessions doesn't work, so it is just plain wrong. But of course, the central bank exists because it's there to depreciate the currency, which transfers wealth from ordinary folks to those who are in government or who depend upon government. It's just plain evil, and I think it will become under popular scrutiny, and central banking will be reformed at some time.
They keep attaching electrodes to the dead rabbit, but somehow the dead rabbit never comes back to life.
God, anybody with logic and working at a central bank has got to be having some self-doubts,
They like the guaranteed paycheck, Bob.
Yep.
I think that's all it is.
They've got the paycheck, and they've got the higher you are up in the Federal Reserve of the Bank of Canada, the more prestige you have. And, you can see why people with ambition would find a place in central banking. And I don't think they ever suffer embarrassment. I think they may suffer at times some strain because, bang, you've suddenly got a recession at some time. Well, we've got one now. But here's another one. In 1980-81, there were two recessions rather close together. I can't remember why at the time or how far apart they were. But, the rebound out of the Wuhan flu crisis into March has been really quite something. And ironically, you could say that if there was a Democrat president, would the National Bureau of Economic Research have said going into the election that the recession is over? That's being rather cynical, but hey, it's a possibility. So we'll see what happens here. But I think the economy is precarious. The authoritarian governments in far too many countries are eager to control people, and they're still using the Wuhan flu virus story as a means to control people. But I think people can get over it and eventually reform things. I'm actually, Jim, on the longer distance, on the political storms that are going on now, I'm an optimist. I think that the authoritarian collective control freaks are kind of burning themselves out and losing credibility, and as this recession continues, they'll lose even more. So we live in very interesting times, but on the longer term, as far as political reform goes, I'm an optimist, and I think it'll work out.
We'll have more with Bob Hoye right after this.
Avon Resources Limited is a gold exploration company. with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're talking with Bob Hoye. Bob, political gridlock supposedly is good for stocks, but your headline says the data doesn't support that.
Yeah, that was from one of the leading publications where they had, that was the theory on one of the positives that has been hanging around in October was the political judgment that you end up with gridlock with a Democrat who shudder president and a Senate run by the Republicans. And the thesis there is that not too much will get done, and if not too much is getting done, some of the bad stuff that they do may not get done either. But the article pointed out that really that evidence doesn't hold with that, but it was sure a good reason to buy the stock market. And of course, what really gave the spike to it was the announcement that a viable vaccine was pretty close at hand. And you could understand that one, but the markets are kind of overdone and due for a correction anyways. But the idea that there's an agent, a hand, that will provide good is, but when they mention the gridlock, you end up with the perfect condition, and I remember that years ago was described as the Goldilocks phenomenon, where the markets were just right. So you had this female figure, Goldilocks, and then also a few years ago, the financial analysts would use the term rosy scenario, which if you consider as a woman's name, that's something. And then, of course, you've got Lady Bountiful as well to consider. She's always very attractive. But then what can happen? There's yet another lady's name, Miss Steak. Sorry, these are bad puns. So anyways, a mistake is just around the corner.
And of course, there's misunderstood as well.
Oh, if I had thought of that one yesterday, Jim, I would have used it. Misunderstood. That's even better. We will put that into the lexicon.
And the last headline, U.S. companies are stockpiling cash. What's the story there?
Oh, yeah. Well, during the Obama administration, the U.S. was more of an advantage for major corporations to keep their cash and operations in other countries than the U.S. because you didn't know what these Democrat predators were going to do. And then with the Trump reform, the corporations it was getting attractive to invest in the U.S., so they came back. But now this headline says that they're building cash. And we should go back to the early 1930s when in that crash and contraction with deflation, cash is picking up purchasing power every month kind of thing. And people did end up hoarding cash. And the think tank that Roosevelt put together, and they called it the New Deal, it just drove them bonkers that people were not spending money, saving their cash. And merchants had little stickers or flags to put in their windows about condemning hoarders. So it's one headline, corporation could be starting to build cash on the prospect of a storm, financial storm. You never know. It's their right to do so, and we'll just see if it continues. If it continues and gets more serious, the way it'll learn that, it'll be when the headlines, and you'll have economists and central bankers frantic about people hoarding cash. But it follows, because you get a decade where everybody speculates in commodities and tangible assets, and that's the hoarding of real things, and then that gets blown out of proportion and then crashes. And then that sets up a decade where the speculation is in financial assets, stocks and bonds, and buying of those can be considered as hoarding. And so people have been hoarding a lot of stocks and bonds lately, and then when that crashes, then the shift is to they hoard cash every time. So this is where this headline about companies beginning to build cash could be interesting, and we'll watch and see how it goes.
Bob, thank you so much for chatting with us.
Well, Jim, it's always good to work and with you, and I look forward to getting together next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He loves to answer your questions. You can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.